Good morning. So I'm just going to give a few tips on if you're thinking about purchasing a property. If you're thinking about purchasing a property, whether it's a house, a condo, a 2-flat, 3-flat, 4-flat, or whatever it is, even if you're thinking about renting and using a realtor, your credit score has to be where it needs to be. There are lenders that will lend at 580, but I say if you have like a 600 or 620 or higher, you good. Okay? And don't check Credit Karma. Now, Credit Karma is good, so it give you a list of all of your all of your creditors and your debt and stuff like that, but the scores can be inflated. So if you use Credit Karma, from my experience, whatever they say your score is, you got to knock off about 10-20 points. So that's just from my experience. So if you're looking to purchase, check your FICO score. FICO. Check your FICO score. And then you got to have a down payment. So if you're a first-time home buyer, for instance, then your down payment is normally like 3.5%, which means if you got a property that's $100,000, you're going to need $3,500 for your down payment. And that doesn't include the closing costs. Okay, it doesn't include when you're going to get your home inspection or when your lender charge you for the appraisal. So you still got to have some more money besides that down payment, right? So you need your closing costs, which can vary. You need your down payment. That could vary as well. I was just using a first-time home buyer as an example, because conventional, you would need much, more down. Your debt to income. So you have to have a steady income. You got to show a steady income that you get on a regular basis, So whether it's monthly, weekly, or whatever the case is, the lender is going to look at how much debt you have versus how much income you bringing in. So if you're thinking about purchasing a property, get pre-approved first. Get pre-approved first, because if you get pre-approved, you will know how much house you can afford. Okay? And then you can always try more than one lender as long as you're doing it all together. You know what I'm saying? Don't try one lender. Let's say you try a guarantee rate or something and get a pre-approval. Don't wait another month to do another pre-approval, because that can hurt your credit score. So do all your pre-approvals like in the same month. You might want to try a few different lenders or a few different banks or credit unions or whatever. So just try them all within the same month, whoever you thinking about using. And if you need me to refer some lenders to you, I can do that too. So if you're thinking about buying a property, get pre-approved first. And sometimes, you might not be ready. And that's good. But if you get that pre-approval, at least that lender can tell you what you need to do to get ready. Right? So yes, if you're thinking about purchasing, get pre-approved first. And then when you get that pre-approval letter, it is good for like 90 days, sometimes 120 days. And like if you don't find your property within that time frame, then you can always have your lender do another pre-approval for you. But yes, I can't stress it enough. If you're thinking about purchasing and you need a lender, a loan, a mortgage loan, you got to get pre-approved first.